Let's start off with those banking stocks. The overall index, banking index, falling back by 2%. Looking at some news flow out of the banking sector, 5 of the rescued banks are expected to call for extraordinary general meetings before the September 30th deadline in order to get shareholder approval for the recapitalization deals. Do you expect that shareholders will vote in favor of these mergers?
Thank you, Samantha, for having me this morning. I think, the way the situation is right now, most of the banks, if not all the 5 banks, will actually vote in favor of the TIAs. A lot of them are concerned about what happened to the 3 banks that were nationalized recently, and the shareholders do not want the same fate to affect them or to afflict them as well. We also heard from a consortium of some of the shareholder associations, 20 of them, saying that they've agreed that they're going to vote for the approval of the TIAs whenever same is presented at the EGMs. So we expect that they will be approved.
Akeem, which of these merged entities in the rescued banking sector space do you feel will form the most successful marriage?
I think so. It's going to be challenging. Any marriage or any merger initially will have some teething problems, but I think the potentials of these banks, when they are merged as one, to actually be better than they were as a single entities is much brighter than them continuing to operate as single entities. We also need to remember that for the rescued banks, they've already had a lot of their assets, bad assets, taken off by AMCON. So most of the banks that are acquiring the rescued banks are actually largely going to be on the sound footing. So we think the results will be much better than what we currently have right now.
Let's move on to the cement sector then. Ashaka's first half results out yesterday. Turnover marginally up by 1.4% to 10.2 billion naira. Profit after tax basically flat. That's only a 0.5% year-on-year rise there to 1.6 billion naira. A weak first quarter performance for that company. But if you compare the results to the likes of a cement company of northern Nigeria and also larger players like Dangote, rise there a lot less than we've seen from those other competitors. Why do you see this relatively flat performance coming through for Ashaka?
For Ashaka Cement, it appears from the analysis of their results, it appears that the benefits of switching over to coal is actually yet to fully kick in. It appears the company is yet to fully convert to the coal-fired system of energy that they were thinking of moving over from the LPFO. So we still see the performance as below our run rates based on our expectation. Having said that, we expect that, as soon as they finish moving over to coal, their efficiency rate should increase and perhaps their profitability will also increase. If you compare them with CCNN actually had a surprising performance. They actually exceeded the expectation of most analysts with their results. We think that they are already enhancing their efficiency, and maybe that's good news for them because they are meant to come to the market in the next few months to raise some debt and equity. So Ashaka Cement, we are still watching the stock and hopefully expecting that they will have a positive move over to the coal-fired system for their energy needs as against relying on LPFO.
That, of course, will help on the cost side, but in terms of the production capacity, it's one of the companies that isn't adding additional capacity while the likes of Dangote and Lafarge are building aggressively in order to meet the supply gap that we see at around 3 million metric tons at this stage in terms of the local market demand. Why isn't Ashaka building extra capacity?
Ashaka's capacity is not as huge as other competitors in the market. Right now is about 0.85 metric tons, and what the management has said to us has been that they're going to increase that to 1.2, which is still relatively small, compared to what the competition is doing. I think that, Lafarge, which is the majority shareholder in Ashaka Cement, they may need to look at their strategy again, because Nigeria is restricting importation of cement into the country. The government wants to encourage local production of cement. We are aware that, Lafarge WAPO is increasing its capacity with the Lakatabo operations. CCNN is also working on enhancing its capacity. Same for Dangote Cement Group. So Ashaka Cement may need to do a bit more and a bit quicker as well, if they really want to continue to maintain a good market share. Otherwise, they may find themselves being overrun by competition around their catchment area.
That being said then, and the fact that they are a part of that Lafarge group who is adding additional capacity, would you look to be getting exposure rather to the likes of a Lafarge and a Dangote or perhaps a smaller player like CCNN as opposed to a Shaka which hasn't announced plans to increase capacity?
I think that, the potentials of a Dangote Cement increasing capacity, it's already a reality. Ibesha is virtually completed, and Lakatapu in the southern part of Nigeria for WAPCO is also virtually completed. So Ashaka is still struggling in that area of capacity, and I hope that they will actually look into it as quickly as possible. The immediate problem they need to address really is the energy source. LPFO is very expensive and is killing the company, so it's impacting on the efficiency. So they really need to first of all move over from LPFO to a better energy source, which they're already working on, coal. They have a large coal mine and they're already building the equipment. If they're able to ensure that the transition goes on smoothly, then there may be a respite for the company.
Cement prices have been ticking high as a result of the supply gap that we've seen, sitting at around 1,800 naira at the beginning of the year. Some saying going as high as 3,000 naira at this stage. Do you think that prices will remain elevated into the full year?
The prices of cement may actually remain a bit elevated for some time to come. Most of the major suppliers are already major distributors are already saying that they're not getting as much output from the cement manufacturers as they should have expected. So I think the price may still be high. Maybe the government may need to revise their relaxation that they had, or maybe they may need to relax the level of importation allowed to some companies to import cement for a while if they really want to address the prices. But I think that, if nothing is done, the prices of cement will remain elevated for some time to come.
Let's take a look at the brewery sector then. Guinness collecting 1% yesterday. Any particular reason for the stock's outperformance? We saw that market to the overall market falling back by 0.7% yesterday.
Guinness is still a favorite for investors that are looking at the consumer names. Guinness, Nigerian breweries, Nigeria still has a very, very large population, and we think that, with the intention that they've expressed in action right now by actually expanding their capacity, they are looking at getting more of the market before the impact of SAB Miller is actually felt in the system. Nigerian breweries is doing the same thing, so the fact that the share price went up is a reflection of the confidence of investors in the strategies of Guinness Nigeria, at least for now.
That being said, though, but the brewery sector has run pretty hard versus the overall market, which has fallen back by more than 8% to date, for year to date. Would you be looking to get exposure into the breweries at this stage, given the fact that they've run so hard already?
Yeah. I actually agree they've run so high already. The fact is, during the financial crisis, a lot of investors actually felt the FMCGs and the consumer names are actually the safe havens. And the Nestle of this world, the Guinness of this world, the Nigerian breweries of this world, were the stocks that benefited from the flight to safety, if I may call it that way, from most investors. Right now, I think that investors will be looking at their options again. The fundamentals of most of the financial sector participants are actually very, very good. So we think the fundamentals are very bright for some of the top names in the financial services sector, like Guaranty Trust Bank, like Sky Bank, like Zenith Bank, and First Bank. So we think that there may be a switch in the near term by investors into these names, especially after the line is drawn, the September 30th line is drawn, when we'll see the final resolution in the banking sector.